Hi guys, welcome back to the channel. So today we are going to be talking about entry point and exit point, how to enter a trade and when to exit a trade. So I'm going to show you how charts looks like. Okay, this is a chart. Hold on a sec. Right. Okay, this is how charts looks like. Every chart, when you just open your trading view, this is how you're going to see it. It's going to be in green and red. Why the green is the bullish candle, the red is the bearish candle. So you can decide to change it anytime you want. So this is my chart. This is Euro USD. As you can see, my candlesticks, I've changed the colors white and blue. The white is for the bearish candle, while the blue is for the bearish candle. Anybody can design their candlesticks however they want it to look like. So on today's video, first we are going to talk about the time frames. So this is exactly where you come from when you want to edit your time frame, from the 4 hours to the 1 hour to the 30 minutes to the 15 minutes to 5 minutes and even 1 minute. Okay, yeah, we have the daily too. This is what the daily looks like. This daily, this daily. Yeah. So this is the daily. This is how the daily chart looks like. If you go to the weekly, you see same thing. Everything that has happened in the past 1 week, 1 month, 3 months, 6 months, or 12 months, you will see everything and what is actually or currently happening in the market, right? So many of us don't know when to go into a trade and when to go in. First, I would say we should talk about the time frames. I've seen so many people taking positions on the 4 hours or even on the 1 hour, which is not bad depending on the kind of trader you want to be. You either can be a swing trader or a day trader or inter trader. You get my point. So mainly for those of us that are day trader that trade for just few hours and you are done for the day, as long as you hit your profit target or you hit your stop loss and you don't want to trade for the rest of the day. So why you see so many traders going to the 4 hours is not to take a trade on the 4 hours. If you want to hold your trade for longs, probably for weeks or months, that's why that's when you'll be taking a position on the 4 hours or on the 1 hour time frame. But for you as a trader that would just want to like take a trade for few hours or few minutes, the 4 hours is not for you to take a trade. The 4 hours is where you come to look at what actually has been happening and what is going to happen next. It all depends on your strategy that you're using. I feel some people don't even come to the 4 hours or the 1 hour time frame. But as a beginner, I suggest you do come to the 4 hours, to the 1 hour, even if possible to the 30 minutes, for you to be able to see actually the bigger picture, which is called it is actually called top down analysis, from the 4 hours to the 1 hour or to the 30 minutes. Then you can now decide to take your trades on the 15 minutes or 5 minutes time frame. As for me, I do my analysis on the 4 hours, the 1 hour. I even go down to 15 minutes to check for a confirmation. Then I now open my MT5 and actually place my position on the 5 minute time frame. Okay, so I'm going to show you what to look at. So, and for the time frame, that's it about that. But for taking trades, when to enter and when not to enter, that's where your strategy comes in, right? Is either you are a SMC trader, or you are an ICT trader, or I think someone actually reached out to me recently and was talking about turtle strategy, something, whatever strategy you trade, as long as you backtest it and it works for you, stick with it. You understand? I'm not going to come here to tell you that okay, this strategy you are talking about is not going to work, or this is the best, or this is not the best to do. But if you actually see what you want in the trade, you take it. When you feel like the market is going to reverse to the opposite side, you close or you allow it to run till it hits your either your break even or your take profit or even your stop loss. It all depends on you. But the most important thing is you have to apply proper risk management whenever you are trading. You shouldn't fund your account today and before Tuesday or Wednesday your account is gone. All right. So I'm going to be showing you guys how I actually do analyze when to take a position and when to exit, right? So as you can see, this is the 4 hour. And again, we have tools for all of this. Here we have the trend lines. You understand? This is where you find your trend lines and so many other lines that I don't use. Alright, but here is your trend line in case you want to draw the let me show you how to use the trend line. If you want to draw your support and resistance, stuff like that, you can make it thicker. This is your trend line. You see, that's what it's for, right? And you can remove it anytime you are done with it. And here we have the buy tools and the sell tools, which is the long position and the short position. The long position is when you want to buy, right? When you want to buy, you see this point is your stop loss. The moment it gets past this place and gets to here, it has hit your stop loss. So if it gets to this point, the highest point of these two, it is your take profit, right? And this line between the buy and sell, the buy and the stop loss side is your entry point, right? That's where you put your entry in case you want to set a buy order or a sell order. You use this middle line, this line that is dividing the both of them, as your entry point, right? Same goes to your shorts too. You see, your stop loss now is out above the trade. If you are buying, your stop loss is below. If you are selling, your stop loss will be above and your take profit will be below. Okay, this is your take profit, your entry point, and your stop loss. Take note of that. And we have other tools also for those of us that wants to mark our demand zone or whatever you want to mark. These are our two, this rectangle we use to mark. All right, and for me, I actually like these two because whenever I want to trade, instead of using the line like the trend line, this is very easy and convenient because I can just, if I want to buy from this point, I want the market to retrace back to this point, right? Before taking my buy order, what I do is I just go for the long tool. You click on it, you drag it to this point, right? You place it here. here, then you make sure you drag it. You see where I stop? That's my entry point. Okay, and below is my stop loss. You understand? This is my stop loss. The moment it gets past this gray sign here, I've hit in stop loss. You get my point? So this is your entry point. This helps you to mark your support and resistance level too, alright, or your supply and demand level. This is actually a demand zone, and this is your supply zone. The point where you are buying from is a demand zone, or the point where you are selling from is a supply zone. That is the lowest point and the highest point is your either your support and resistance or demand zone, whatever you want to call it. Because I feel like support and resistance and demand zone, you can just refer to them as same thing, but whatever you decide to call it, you can call it. Okay, I don't really feel there is a need for all those names and stuff, but whatever works for you though. So now I'm going to go ahead and clear the chart. You can see my chart is very neat, not much stuff. I know some of you now, if we ask you to show us your chart, you see so many trend lines, Fibonacci, blah blah blah, whatever, you have it there. But that's not what we do here. So now this is how to take a trade, when to enter and when to exit. This is our 4-hour time frame, as you can see, 4H, and the currency pair we are currently looking at is Euro USD, EUR USD, and here you see Euro US dollar, right? 4H, 4-hour time frame. So every candle you are seeing here right now was created every 4 hours. Okay, every single candle here was created every 4 hours. They burn each candle here every 4 hours. As 4 hours reach, they burn this one complete. Another 4 hours start, another time start. This one start to read till it's time for it, till it's a complete 4 hour, and this one closes as well. So the thing is, what happened here is that this is a week, but this is the body, and this is telling you that the market actually came to this point, right, before it starts going up, and it also reacted to this point before it now closed here. You understand? This is your open and this is your close. Then this blue part is the body, and this is a wick. Every candle you are seeing here is telling a story. Right, they've all going through few phases, let's just put it like that, right? So as a trader, there are things I consider before I actually take a trade. One of the things are confirmation candles, right? And I feel like the best thing or the best time to trade is if you see your confirmation on the higher time frame and it plays well. You understand? Like for me now, I actually do look for a pin bar or a hammer candle. This is a hammer candle here, right? This is a hammer candle right here. And what do I need to see before I actually take a trade as a confirmation for me, take this trade as a buy? Now, we want to mark this particular zone, this as our demand zone. We're going to mark this as our demand zone. Okay, hold on, let me place this properly. So why I've marked this place as my supply zone is, as you can see, we had a little conflict right here on the 4 hours, right? On the 4 hours, there's a little conflict right here, but this doesn't mean that if you go to the smaller time frame, you aren't going to see like enough of events. Okay, let me just show you. A lot of things must have happened if you go to the lower time frame. Let's just do this. Let's mark that particular zone. Okay, yeah, you see the yellow part, right? The yellow part. Now let's go to the 1 hour time frame. To the 1 hour time frame. See, you have to adjust it because if you are going to the lower time frame, you tend to see more candlesticks, right? The higher you go, the lesser candlestick you get. The lower you go, then you see that the candlesticks become small. You have more candlesticks than you used to have on the higher time frame. Now you see, this is where we marked. As you can see, you see that this has created so many candlesticks right before where our zone that was marked. You see it. There was actually no like good movement. This is actually consolidation, right? Yeah, consolidation or ranging market. So there's no actual movement, right? But what I want you to see, what we've marked on the 4 hours, you have to check it here. See, it's a long thing on the lower time frame. So let's go back to the 4 hours. Let's go back to the 4 hours. So on the 4 hours time frame, let's say I've seen this movement. As you can see, there was reactions here because the market was falling from this point down to this place before it started, consolidating. We are started seeing weeks, weeks, and weeks, which is actually telling you that the market is about to reverse or sellers are weak. We are about to have more buyers in the market, right? So if you look at this, we have three strong candles here. Let me not say three. We have two strong candles here, right? This one, this first candle, the blue candles, and this second blue candle, right? Then we have the third candle. So what you want to look at, let's say this hasn't been created, right? The market was still here around this zone, right? Around that zone, yeah. So, and we don't want to drop into the market. We want to wait for a reversal before we actually buy, right? If you look at these two candles now, they have strong body. You don't, it doesn't have much wicks, especially the number two candle, right? And you can see here, this is a doji candle. Let's just call it a doji candle because it doesn't have a big body. It has a small body compared to other candles here on the 4 hour time frame. It has a small body, so I'm going to call it a doji candle, right? And after a doji candle, you want to see a break of the next candle either below it or above it for your confirmation for a buy or sell order, right? Now, before this place actually took off as a buy trade, you see we had the doji candle. The next candle that opened after this doji candle actually closed above it, right? So whatever, some people can call it their block order, their order block, right? But for me to just explain this for you to understand right now before we start talking about order block or fair value gap, right? This is what you should be looking at as a confirmation before you actually take a trade. Okay, I'm not saying there is nothing like order block or fair value gap. They are fair value gaps candles. So these long candles, impulsive candles, are fair value gap candles, right? But you see this, we have a doji candle, right? I told you that if you look at this place, we start after the move down here, we start having candles that are not strong, candles that have long wicks, right? That have long wicks. So when you see this, we had a doji candle, right? And this came up. This candle came and went straight up. You see, after the break of the whole thing, this is actually a break, but this is where the main candle started moving, where it started forming, like the candle, the gym. You have seen that this gym don't dey work on these guys, right? You have seen the strength here, that okay man, if this guy keeps this thing up, is going to be very strong. So you see it, after this candle was from 1, 2, 3, and this one actually had a weak, but a small weak and a small body though. Then the next one went up impulsively. You understand? It went up impulsively. So now let's say we were not here, we were not in the market when this whole thing was happening, right? Now what are we going to do? We want to wait for this market to come back and fill all these orders here, right? Because this is a demand zone, right? This is where the market started moving from. You get my point? This is the candle that broke out this whole consolidation around this zone. You see the market was actually just playing around here, but after these 1, 2 candles were formed, the rest of the candles starts, the boldness came in for them to start actually moving up, and which they did. Then after the breakout here, after every breakout, this is what you should take note of. After every breakout, there is always an impulsive move candle 80% of the time, right? Let's just say if you take 10 trades, 8 of it will actually go your way, then probably two or three will go against you. But after every breakout is always in an impulsive movement. You see, this is where the candle actually broke out. Then the next candle that came after that went up massively, right? But this is where the whole thing has started building. This is where the strength was coming from. These are the main people that held these other guys up, that okay, you can do this, all right? So now for this, we were not here when this whole thing happened, but for us now to not miss this next thing, what we are going to do is draw our rectangle. You see, after the impulsive move, the candle actually came back to fill this place, right? You can see it came back to fill this place. I know some people will tell you that okay, once this is filled, that's okay and that's enough. If you actually take this trade, that if you are a kind of trader that goes for 1:2 trades, right? This would have actually been a very nice trade for you. You would have hitting your TP before this whole thing happened. Or if you probably extended your take profit, I'm sure you would have also set your break even as well. So this trade would have closed still in profit. Alright. So you are still good. So now you've missed the whole thing, but okay, what now? This is still going to come back. This is your demand zone. It's still going to come back to this point, right? Whenever there's an a fair value gap or another block, we have the market always come back to fill it. Okay, so now we are going to draw our rectangle from the previous zone, right? Because this has happened before we get here. So what we are going to do now, we are going to draw our rectangle. That's why I drew from this point, right? From this point, that's where the candles, very strong candles, right here. Now let's say we saw this trade here and we don't want to jump into the market, because as a trader you need to have your own strategy. You understand what works for you. So you need to have a strategy, and that's why we have different kinds of strategy that you can actually trade. So now, when we saw the market here, and I feel like okay, it's going to come back, because you see these candles here, they are free, they are strong candles, right? One, two, very strong candle. It's not easy for this trade to just come down and break through. You understand? This is enough. We have enough guys here to push this thing back up. So we are not just going to allow it. But some, it's not like it's 100% assurance that this trade cannot come down and break it. Sometimes we have what we call news events that can just change the trend of the market. Okay. So there's a possibility that when this trade got here, it could just push down and start pulling down. But since we did not have that, this is a strategy. You apply it to your work and see how it's going to go, right? So we've marked it from this point where this trade actually took off from and starts buying. We are going to draw it, our rectangle, from here to the point that this trade is going to come down to, right? So if you are not actually available when this is going to happen, so what you have to do is you just draw your rectangle and wait for it to come. So as you can see, now you are not going to take the position because this has gotten to your point of interest or your demand zone. Okay, you are not just going to take the trade because it got here. You have to see a valid reversal candle. You understand? And this is a reversal candle, this hammer candle. Like what did I tell you? You have to see a reversal candle and you wait for the next candle to close above it before you take your trade. So now what we are going to do, as this candle is coming here, we go down to the 1 hour, right? We go down to the 1 hour. You see everything was happening. Remember this point, you can see this point we had right there, we had on the 4 hours we had the doji candle. As you can see, these two, the two candlesticks that did the supporting candles, the move, you see them here. You see this second one is still very strong, although it's not that big. Oh, don't mind, it's small but mighty candle. You see standing, it stood there. So now we'll come back to this point, right? This is where we marked and the market was coming down, so we'll wait for it, right? So now when it goes back to the point where it took off from, remember that is the side here, that is behind here, we had to wait it to come back to that same point, which is here. Now it got to this point and this candle here now is forming strong candle. You can see, let me zoom it for you. You see this particular candle here, this one that is coming here now, it has already touched this place, so it's now forming strong candle. So now you'll be thinking, what should I do? Should I enter since it is coming to this place already? You don't rush it. You have to wait for your confirmation. Now, what happened is this, and the mistake that some traders do is they rush into the market because okay, since there is a possibility for the market to come back and retest that particular zone where it started its movement, some people will not want to wait. They will not, they don't have the patience to wait for the market to give them a full confirmation before they take the trade, right? So now what do you do? This is on the 1 hour time frame. I like to get my confirmation sometimes on the 1 hour time frame. I just go to the 4 hours, look at it, what's happening, then I come to the 1 hour, right? So if this has formed on the 1 hour, you are seeing a strong movement down, because when this candle is actually forming is a different thing that is happening on the 15 minutes time frame. This is a whole 1 hour candle. And if you go to the 15 minutes time frame now, you are going to see four candles, four different candles, plus this one, you are going to see 8 different candles. So it's another good place for you to see your confirmation. Now you see this candle here forming Mr. Strong, Mr. Strong. Then it closed with a wick. Assuming this candle would have closed with a full body candle, probably maybe this trade will still push down, but no, it didn't. It closed with a little wick and another one started. You get my point? This is the open and this is the close, and this tiny little thing you are seeing here is a wick. This is the body. Open, close, wick, and a body. Alright? And what is telling you now that when this candle opened, it actually got to this point, the end of this week up here, and it actually came to this point, this particular point of this candle. But what happened? It didn't close here. It came back to this place before it closed. Alright. Now, for a good confirmation, this is a doji candle. Let's take it as a doji candle, although this is not really a doji candle because this body down this week down here is longer than the one down here. So after this closed, the next candle that closed above it. Trust me, this is a very valid trade to take, a buy signal, very strong signal to buy. If you see this trade in any time that you are watching your chart and you see a position like this, a setup like this, take it. Take it. 80% of the time you are going to make profit. You are going to hit your profit target. If you are the kind of trader that target 2:1 or 3:1, you understand, you are going to hit because we are going to measure it. Now let's go to the 15 minutes. We have looked at the 4 hours. We have seen the 4 hours. Now we are on the 15 minutes. So when we got to the 15 minutes, what you want to see is still a confirmation. You want to make sure that this is going to work out. Let's go back to the 4 hours. You see on the 4 hours right here, on the 4 hours, this is a long weak candle, but on the what's it called, on the 1 hour, you are seeing 4 candles. You understand? We saw more candles than this. So that's why you need to calm down a little and see what the market is actually doing. So now when we went back to the 1 hour, when we went back to the 1 hour, it's another game ball. It's another ball game, right? You see it. We are seeing it right here. We were showing that okay, man, we are still going to push down, but there were wicks coming in after this impulsive move, right? We are seeing wicks, weak. Then this one want to come and claim Mr. Strong, but he couldn't. So the close of that 4 candles now opened here. After that 4-hour candle, the complete form of the 4-hour candle closed here. Starting from here, 1, 2, 3, and 4. Now close here as a doji candle. So now, okay, we have seen this. So what are we going to do? We are going to wait for this candle now to open, to close. But if you want to wait for this whole candle to close on the 4-hour time frame, it's a different thing. You are going to see 1 hour, we are going to see one candle running for 4 hours. But on the 1 hour, you will be seeing what is happening. it's telling you that the market is going to close. On the 4 hours alone, when you are seeing that pin bar, that candle that has and long wick and tiny um body, you know that that's the pin bar and the market is about to change direction, right, to the upside. So now we'll go back to the 15 minutes. These are the three time frames where I check for confirmation before I actually take a position, either a buy or a sell. So we are here on the 15 minutes. So I'm going to try. You can see as we are going down on the time, we are having more candles. Crazy, right? Right. You can see on the 15 minutes. If you are on the 15 minutes, you can actually decide what you are going to do here, right? It's not like the chart is not going. It's going. But everything here, if you look at it as a beginner, you'll be confused, right? Because there is no actual confirmation here. There's no actual confirmation right here. You see a little consolidation right here, a few candles forming at this on the same position, doing up, down, up, down, up, down. Then suddenly there is a push down, impulsive move to the downside. That is the move of that candle on the 1 hour that I was telling you about, right? That said it was forming big, and all of a sudden it now came down. Right. So now why I don't actually look for my confirmation on the 15 minutes time frame sometimes is that why the 1 hour and the 4 hours are telling you something valid, the 15 minutes can be saying something different, right? But still, for us to confirm this trade here on the 15 minutes time frame, you see after this push down, you see the market started creating wicks that are not as big as strong as others, right? If you see the movement from this point to this point, it's actually different, although more consolidation too. So after this thing tapped in here, most people would have jumped in, right? They would have jumped in when they saw this candle. But for me, I would wait. And I will actually and surely wait for the close of the 1 hour candle, right? Before I would take a trade. So now you see after this impulsive move, this candle here, this particular one right here, after it moved down, the next candle opened and boom, what happened? We had another strong candle here. Remember, we are now that we are here, we are looking for confirmation. So your mind will be here, not what has been happening, or you don't even want to see what you don't care about what is happening here, right? But what you want to see is the point that you marked, if the market will actually get to that point, and which it did. So what you are going to be looking at is reversal or confirmation. And when it came in, the impulsive move here and this other candle retraced back, the fourth candle, what happened to it? It closed strong, right? That's 1 hour candle. If you count it, you see four candles: one, two, three, and four. That is the 1 hour candle that I'm talking about that I need to see to close before I actually take a trade. So let me show you the candle I'm talking about. This candle right here, this one, that is what you are seeing. That's what you are seeing. So if you go down to the back to the 15 minutes now, you are going to be seeing something different. So right here, you see after that 1 hour candle closed, it closed above with a strong candle. It wasn't even playing. It told you that, bro, you can come in now, right? So immediately you go in your trade, you take a trade, and what you are going to be targeting is, if you are a trader that targets 1 to 2. So what I do now, I go back to my MetaTrader, because I don't place trade on trading view. I will go back to my MetaTrader, open it, and here I'll make sure I set my buy order right here with the tools that we have, right? So what I'm going to do is, I'm just going to set, you need to calculate the pips, so the pips on how much you'll be risking and how much you'll be gaining. Alright, see, now I'm going to place my buy two. I already have them as my favorite. That's why you are seeing these yellow stars, so you can find them here. Any two you know you use constantly, you can just mark them on the yellow, on the stars, and it will be added to your chart as favorite, so you can find them right here. So I'll just use my long tool, I just click on it and put it here, right? And put it here because the market has gotten to this point. I'm just going to assume that it's coming there. I need to see it there before I will actually start placing my tools. So now what we are going to do is, I'm going to set it here. This is actually Euro USD. So I like to have my risk reward usually is more than 1 to 2, because the volatility of currency pairs are not really that much, right? Right here, that's the entry point. Or you can still, sometimes you can just, depending on how your analysis is, you can bring it a little bit down, the rectangle. Okay, so we are going to target 1:2. Okay, see, this is here, your reward ratio is here 2. So if you're in this trade, you took this, you would have made a lot or some amount of money depending on the lot size you are using. Alright, so this is how you set your buy, your stop loss, and your take profit. Okay, so if you decide to maybe even go higher, you can increase it. If you target like maybe let's say 4 or 3 RR, you see it, risk to reward ratio 3.27. See, the trade actually played out. So this is actually just supply and demand, your supply and demand level. You can see it played out. That's very nice. The volatility of currency pairs cannot be compared to all these commodities and other stuffs, right? So usually this is how you take a trade and how you exit. Okay, you wait for it, you make sure your stop loss is below the previous um trend, below your, make sure when you are trading supply and demand, you make sure your stop loss is below your entry point, like where you're marking your demand zone from your rectangle, where you are setting your rectangle, your stop loss will be below it. And as you can see, we have our stop loss right here. So anything that makes this market to break this zone now, what we are going to do is wait for a retest, and hopefully the market will buy, or possibly it can even continue just pushing down, selling down, right? So this is how you target your do your this thing. Your two risk to reward should be around sometime maximum two. Your risk to reward should be two or even three, depending on your strategy, right? So, and the reason why I'm targeting these two is because, as you can see, this market, when it came back from this point that we marked, right, as our supply zone, it came all the way to this point, and is an impulsive move to the downside, right? And after every breakout, this is a breakout. After every breakout, there's always an impulsive move, and the market will go back to retrace where it broke out from, or even go past that point. You see, this is a breakout. It broke out from this zone. That's why we are targeting. If you want to go more than 2 RR, you make sure that this point where it breaks, it shouldn't be more than this, right? It should be around this zone. Okay, so now we have secured a trade and we actually won it. All right, so that's how you become with consistent practicing of this. You get used to everything that I'm saying, and you even understand it better. Say, you can now even be giving me trade, but you always have to have a plan, a strategy. Okay, so we went from the 4 hours to the 1 hour to the 15 minutes and to the 5 minutes. If you want to trade, you just go to your 5 minutes on your MT5 and you close. Okay, that's how we go, and this how you take trade, and how you target your profit level, your take profit, and how you set your stop loss as well. This might be too much for you. Don't go and draw wide rectangle like this, because I draw wide rectangle. You can still reduce this down. Okay, you can see, if you are using small account, this setup might not be for you, right? But this is what we do. This is how you actually wait for your trade to play out. Okay, and remember, this point, this is a breakout. Okay, and after a breakout, there is always a retest back to that zone where it broke out from, and most time it goes past there and just continue going back. All right, so you always want to apply proper risk management whenever you want to trade. Okay, so on the next video, we'll be looking for a sell positions. I'll be explaining sell position for you as well. So I'll be seeing you guys in the next video. Please don't forget to like, share, turn on the notification bell, and subscribe to the channel for more educative videos like this. See ya.